Hello, trading has closed on the 15th of April, 2024. As always, we'll start with our disclaimer, go over our calls and make some predictions. It's my trading plan for tomorrow, Tuesday, April 16th, 2024. Please remember my calls can be wrong, trade at your own risk. Also, I have personal business tomorrow and probably won't do any trades myself with my own money. Look for the pattern with the early low, which is this. Tomorrow should have the early high. The call was absent a gap under this low. We should see higher prices regardless of where we close. Here's what we said. Well, we gapped up 40 points. I mean, that's certainly higher prices. That didn't mean we had to close higher, and obviously we didn't. Well, this really isn't a healthy pattern when you close under the FOMC announcement price. We've now gone under it by more than we've gone over it. And when the decline ends, we should go over the price by more than we went under it. But that doesn't mean it ends here. It also isn't good that the RSI has gone well under 50. It implies we're in a declining stage, and that bounces from here probably aren't the real thing. We need to do more work on hitting the low. Well, during the day, MEJT said we should see lower prices, but the minimum target printed immediately. Nothing says you have to stop at the minimum, though. We didn't. If you connect these highs, you'll see a parallel channel ended right here. It's an important line. Either you gap under that channel or the channel wins. So, if we're going to continue on the beta, we need to gap down tomorrow. If we don't gap down, I think any move under this line, even if it occurs, isn't going to stick. Makes it possible there's a rally tomorrow. Well, if we drop, we could go as low as the fourth wave of lesser degree without changing the bullish picture. And that's several hundred handles down. Not good. But we don't know for certain that's the right count. I think it is, but there probably is some other count that works too. I mean, if someone has wave 3 in the year here and doesn't break any rules, I can't argue with them. As far as the blue fifth wave is concerned, we've gone through that fourth wave of lesser degree, and that's actually further than I wanted us to go. I had a number of Fibonacci targets on the way down where the waves balanced out. There were candidates for lows, and except for one, we've blown through all of them. And the one is today's low. It's possible to count this as an A, B, C for B, and then C, and the fibs all work. Now again, I had some other ones, the fibs were just as pretty and they didn't work. But at least if we rally, you can explain it based on the count. It's not the kind of place I would normally initiate a short position, because if that is the end of this first leg, I don't think it's the end of wave black 2, but it could be the end of A of some degree of 2, and if so, you could have a pretty good rally and still get lower later on. Well, tomorrow's pattern has a early high. It doesn't tell us where we open. Typically, it's a rally day with a high in the final hour, but if you fail, it's a straight line drop. Don't forget, we're already well under the Bollinger Band. It's not impossible you have a straight line drop, but it's less likely. We've dropped to the bottom of a channel in a straight line. The declines to continue unabated, we need to gap under the channel. Otherwise, a break under it, that's even if it occurs, should retrace. Now, the SPX, the VIX, and the Nasdaq-McClellan oscillator, they're outside their respective Bollinger Bands, so level from which reversals can occur. And there's a wave count which has this leg of the drop is complete. So today's low is a candidate, and so far only a candidate for the end of this leg of the decline. That would make a wave A of some degree a wave 2, but until there's a reversal, I have no signal. It's unlikely a 5-month rally will have a correction lasting only 2 weeks, so even if there is a reversal, I doubt it's the end of wave 2. Doesn't mean it won't be big. I still feel once the correction's over, much higher prices should be seen. So it's the pattern with the early high, it's either feast or famine, usually a rally day or a straight line drop. There is enough evidence that we're oversold here to make a rally plausible, but it certainly isn't a lock because we haven't reversed yet. It's the pattern with the early high. That's today's call.